I'll go with the buy on Memphis for targets of 27.90.
Okay. All right, gentlemen. Got that. Thanks very much for it. Quickly moving on to revisit that story that we were just discussing with the Mangalam a while back. An excise duty hike on liquor in Maharashtra. What does it mean for the stocks, Mangalam?
Well, it means negative for now, but importantly, now we have the official document as well. So the Maharashtra government has said following changes will be made on the excise duty rates. IMFL will be increased from currently 3 times of productions to 4.5 times of production. So that's a 50% jump out there. The excise duty on country liquor will be increased by about 14% from 180 rupees to around 205 rupees per proof litre. And they've introduced a new category of grain-based foreign liquor called Maharashtra-made liquor for companies that are making this in Maharashtra itself. So only liquor manufacturers located in Maharashtra will be permitted to produce this type. What does this mean in terms of absolute prices? The MRP for all the liquor in Maharashtra, minimum for 180 ml, has been up for you on the screen. Country liquor would be about 80 rupees, Maharashtra made 148, IMFL 205 rupees, and premium foreign brand will be about 360 rupees. The department expects annual revenue increase of 14,000 crores due to this. So that could obviously be the impact on all the companies. What does it mean in terms of listed companies? 20 to 22% sales coming in from Maharashtra for United Spirits, 7 to 8% coming in for Radico Khaitan. The likely EPS impact, all things considered right now, could be 6 to 8% for United Spirits, 2 to 3% for Radico Khaitan. Though we need to monitor how much would be the cost savings on account of reduction in duty for bulk import, import of Scotch.
I just wonder whether United Brewery will be better placed because we haven't heard anything about that till now. So let's see how that goes.
See how that goes. But in any case, beer on a per ml basis compared to alcohol is a lot more expensive. Yes. It takes you a lot more beers to get high than whiskey.
There's no high on these stocks. They're starting off on a low. United Spirits is down 5.5% as the bell goes on. That's the impact playing out. The market's already turned negative. So the pre-open was indicating a 30-point pop. We've not even got that. Right now, about 18 points lower on the Nifty. Bank Nifty is lower by about 0.2%. Mid-caps trying to struggle back and fight up. Let's take a look at what's causing the weakness on the Nifty. Maruti Suzuki is starting lower. Remember, Parikshit told us this whole rare earth magnets issue is beginning to bite. They could be delaying the launch of the Grand Vitara. What else is weak? There's Shriram Finance, which is flashing a bit of red. There's Power Grid. There's Asian Paints on the lower side. There's L&T. That's about it. Not even a single Nifty stock is actually down more than 1%. So it's again an indecisive start. It's not a weak start. It's an indecisive start. On the upside, you have some names like M&M, JSW Steel, Eternal, and Reliance. Reliance is fighting for the bulls. It's tripping in with about $7 at this point in time. But once again, Nigel, extremely quiet to start the day.
Well, that's right. Extremely quiet start actually to trade. A couple of stocks, though, that are moving around from the broader markets. Thalbros, that stock is up and about in trade today. So that's one of the top winners. You have the other one, which is Reliance Power. That as well is moving quite well. I think that's up closer around 3%. And it's moved very swiftly from around 50 to around 74 rupees. So big move out there. Reliance Infra actually is the one where there was some favorable news flow. Let's pull up that stock and let's see how that one is doing, because the favorable news flow actually was on Reliance Infra, though we have a big up move is what we're seeing on Reliance Power, and the volumes as well are rather high. Pull up the two large trades which we saw earlier today. AB Capital, that stock, I think it opened up in the green. And the other one was Marksans Pharma as well. Both those two large trades getting out of the way. And I think the street likes that. Both those two stocks actually are up closer around 2.5% or thereabouts. Premier Energies as well. We had the large trade that got cleared out yesterday, which got absorbed. That stock, in fact, is up close to around 1% or thereabouts. So a decent start to trade. The clear casualty of the morning is the alcohol-related stocks, United Spirits as well as Radico Khaitan, both of them lower. Obviously, as Mangalam told us earlier, the impact to Radico Khaitan will be much less compared to United Spirits. Mangalam?
Well, we're seeing a 5% decline in United Spirits and a few in Radico Khaitan as well. Just look at Allied Blenders. They too have been, increasing their presence in Maharashtra. So that stock is another one which is down about 3.5%. But on the other hand, we have GM Breweries, which is up really 6%. That maybe the street could be, expecting that, okay, the Maharashtra-made liquor has a benefit out here. But then again, you have to reapply for all those brands, etc. Until then, all the others will also go ahead and, be part of that. So the incremental advantage goes away. But for now, GM Breweries is the one which stands or feels like it stands to benefit from the Maharashtra liquor policy. But one stock we've been pointing out for the last few trading sessions as having done extremely well is Gillette. That continues to do well right now as well. Crossed that 10,000 rupee mark in yesterday's trading session, straight off the bat at a fresh 52-week high or a fresh record high for Gillette, up around 4%. So their products doing well for the street. And then you have 361 VAM, a lot of these capital market plays doing a lot better. Tata Communications, though, down about 1.5%. They've, pushed forward their 28,000 crore data revenue guidance by a year. So the street does not like that. Lower by a smidge. Oil continues to hold under around that $67 per barrel mark, and upstream companies are benefiting from that. So Oil India is up around 3.5%. We're seeing some traction in ONGC as well. Yes, there were a couple of large trades in pre-open, but one of them, not as large, was Eternal. There was a block deal that took place. The stocks opened 1% higher after 2 days of selling on account of fears of competition coming in from Rapido. Maruti is the other one, which is mildly lower, but not too much. Reports suggest that maybe the Grand e-Vitara launch has been delayed by a smidge.
Okay, so it's even Steven, you can see on that map, it's pretty much split with more red than green. Soam Distillery is another one. So basically, the interest seems to be shifting away from United Spirits is the obvious casualty. And people seem to be hunting for different bargains in the liquor space. Soam is up about 3.5%. Obviously, it's a smaller player. Credit Access, Grameen, about 4% up on this stock as well. Oil India is seeing interesting traction this morning. Volumes are not bad. Stocks up about 3.5%. And 361 Wealth Management, about 3% up on this stock as well. Johnson's, Hitachi, HPL Electric, some names coming in from the power and capital goods space, up about 3 to 4%. So once again, it's mid-caps, stock-specific action that's driving things. At the index level, we are very, very flat. Well, good time to get some perspective in then. We've got Anand Shah, Chief Investment Officer, PMS and AIF at ICICI Prudential AMC with us. Anand, thanks so much for joining in. So the market seems to be getting into a what now mode or what next mode, right? Because we've had a good pullback throughout all the noise of April, tariffs, etc. Managed to march higher and higher. Mid-caps also pulling back very, very smartly. But now is the what next? So you tell us, what next?
Hi, very good morning. I think bang on. Our thinking is that the market has reached a consolidation phase. And why I'm saying that, because if you go back a little bit into the history, I think 2010 to 2020 was a period when the economy was okay, but the India Inc. didn't do well. And obviously the markets also was struggling with a very narrow rally on a few stocks. Exactly opposite, 2020 to 2024 has been massively good from earnings perspective. So the profitability of India Inc., NSE 500 dropped from 4.7% of GDP in 2010 to almost 2.2% in 2020. It again bounced back to 4.8. So you had a very strong earnings recovery, normalization. And ditto for the markets, we had a very narrow rally, 2010 to 2020. We had a very broad-based, led by mid-caps and small caps, a strong recovery in generally market from 2021 to 2024. And now we have reached a stage where markets are not cheap, the earnings have recovered, return on equities have recovered, and to that extent, the market will sort of try and consolidate. And from here on, it would be more bottom up. It will be more stock picking here rather than the broader market.
Hi, Anand. Good morning. Good to see you, Ben. Anand, what are you making of the flows picture? Surbi and my other colleagues were dissecting the data. I'm keeping the faith, keeping the flows in. But, the liquidity is something that's been, you throw any kind of bad news to the Indian markets and it's been gobbled up because of the domestic liquidity. How are you reading the flows picture? The good news is the foreign flows are holding up after seeing a lot of selling. But the domestic flows, what do you make of the, the data that we got yesterday?
Indeed, that's the new thing from the markets perspective. If you see, the volatility of markets have reduced a lot. If I go back again into the history, we used to have quite frequent 20% corrections in the market. And if you see now, since 2020, we haven't seen a 20% correction in the market. The most we have seen is 18% more recently, and generally 10% corrections, which are also very, very regular, have reduced in terms of number of such corrections. So I think one outcome of this strong domestic liquidity is that the impact of global volatility and whatever happens in the rest of the world, while it will always have an impact on the equity markets, we still have FIIs being a large participant, but the quantum of impact it makes on the markets has reduced. So overall, the volatility of the markets have significantly reduced as we have strong domestic flows to counter any global volatility leading to FII selling off.
All right, we take that point. Just before we come to you once again, Anand, the quick check and on all the Alcobev stocks. United Breweries now down, United Spirits now down about 6%. We have Allied Blenders, which are down about 5% as well. But amidst all of this, two stocks which are doing a lot better. We have GM Breweries. The street believes that the introduction of the Maharashtra-made liquor policy could be favorable for them because if it is imported and then made in Maharashtra, the duty structure is slightly favorable as against being imported and produced in other states and then brought back to Maharashtra. The one thing that we need to know, however, is that all the brand licenses, etc., will have to be re-registered with the department. So does GM Brewery stand to benefit in light of that for at least the very near term until all the other brands come by and find their alternate sources of production in Maharashtra or not? Is something that the street is taking note of. And the other one is Sula, because on the one hand, you have, an increase coming by on spirits, nothing on beer yet, but nothing on wine at all. And Maharashtra, the wine production is the highest in Maharashtra. It's also the biggest market for wine in the country. At the same time, Sula as a stock has been a rank underperformer, has halved from the 52-week high. And over the last 4 quarters, we didn't see sales improvement out there. So can this policy shift turn the things around for Sula or not is something that the street is betting on, which explains why the stock is up around 7%. So we're seeing a big move on Sula as well as GM Breweries on the back of the policy that came by. But let's bring this question back to Anand. Anand, you said stock specific is the way you would go for the markets. Consumption has been on the back foot over the last few quarters. Do you think consumption revives post the announcement of the budget? Monsoons have been normal. How would you play this? Would you play it via discretionary, specific themes, anything that you like here?
I think we've been observing the consumption very closely. And if you see, especially in the higher per capita income families and the urban India, there is a significant shift in terms of consumption. I think for last 2 decades, we have been focusing on consuming goods. I think we started with FMCG, soap, shampoos, and the Maggies, and 2-wheelers and 4-wheelers, pharmaceuticals being one of them. I think as the per capita income rises, there will be structural shift from products to services. I think the underlying growth which is already happening, and we are not counting it as a consumption, is the consumption of financial services. You can see that in asset management, life insurance, consumption of telecom services. I think we have been consuming 20 times more data than what we used to consume. While we are not paying for it, but obviously we are consuming 20 GB of data, spending a couple of hours a day on our mobile phone. We are consuming travel services. Diagnostics is something which is picked up as a percentage of consumption of a family income. Education has always been there, and people are spending more on education. So I think consumption is growing, especially in the higher income people. But it's shifting from products, from paints to travel. I think that's the shift. Even within the product consumption, if you see the way we consuming products is shifting, right? The modern retail, quick commerce, these are the areas where we are finding growth. We are not consuming more of the same stuff, but the way we are consuming is shifting. And that's why the growth pockets have moved from products to services.
Okay. So that's on consumers. Just to round this up, would you expect, I'm not talking about things like jewelry or real estate as a play of high-end consumption. That story has been ongoing for a while. But would you expect some interest to come back to staples? Could they be, if not leaders of the next move, I mean, at least participants in the next move? Anand, just to complete that point.
Sorry, I lost the audio. I didn't get your question.
No, so I was just asking you to round up your take on consumer stocks. What part of consumption would you play in this leg of the market?
Yeah, so I think we continue to like within the consumption space, we are focused on services. We still have exposure to telecom, travel, diagnostics, and all the services within the consumption space, which is organized retail, quick commerce. These are the areas where we have been more overweight than the products. We have been underweight FMCG. We have been underweight consumer durables, underweight auto also to some extent.
Got it. Okay, so I mean, still going with that stance of negative on FMCG, you're looking to play it more via services. Speaking of services, I was looking at the latest fact sheet in, this is your contra strategy on the PMS side, Anand. And obviously financials get top billing over here. I think ICICI Bank, HDFC Bank, these are some of your top holdings. RBI has obliged a lot more than the market would have hoped for. So within financials, is it time to load up on other stocks beyond the bluest of the blue chips? How are you looking at the financials landscape?
I think it's very positive. In a way, it's basically a fairly strong stimulus. We all know there has been a lot of uncertainty around, particularly international markets, around the tariffs, and obviously that would have pulled some of the consumption back, some of the capex, private sector capex back, and I think this is a strong signal that RBI is giving that the attitude is towards more growth, more spending, more capex. In terms of the banks, I think we continue to like the large names for the two reasons. One, they have a very, very strong liability franchise. I think for us, the first step to winning in the banking space is your raw material cost, the cost of funds. And we continuously remain focused on the banks where you have a right to win, you have a cost of funds advantage over other banks. And that's been the key for us. So we still continue to focus more on modes, more on the cost of funds, and that's how we've been going after the banks that we like.
Okay. Finally, since we're talking financials, I have to talk about your own business, as in the asset management business, because so much excitement, right? And the IPO, I guess June. I think June is filing happens, and maybe listing couple of weeks later. But Anand, you tell us. I mean, till now, when one talks about the wealth play in India, it's been wealth management, entities like Angel or 360 ONE. It's been market infrastructure names like a BSE or an MCX. But the mutual funds, listed mutual funds, they haven't, gone right up there in terms of the investor psyche. What's your sense?
No, I think, again, as I said before, as the surplus grows, India has been moving from single income to double income, and from as a P&L, the households used to be deficit a couple of decades back. Today, you have surplus to invest. And I think SIP has been a very, very strong feature of this market. Even when we're talking of flows into the domestic markets, the one thing which has stood the test, this volatility, has been SIP. So I think it's a convincing move of the Indian household towards equity. So I've been in this market for 25 years, and I've seen when equity was not looked upon as an asset class also. From there, we have moved miles where SIP has been a big significant product which has got a good acceptance from the households. And I think insurance, asset management, and on top of it, the wealth advisory and the wealth management. I think all the three would be required as the per capita income grows and as the savings of the household grows. So I think all the three areas should get growth in times to come.
Okay, all right. Well, Anand, thanks a lot for joining in and filling us in with your take on the markets as well as on individual stocks as well as sectors. Well, time to move on then, and let's talk about the cement sector. Earlier this week, the West Bengal government revoked the incentives for cement companies to assess the impact of this development and what's the broad trends in terms of demand as well as pricing. Let's connect with Mr. H.M. Bangur, the chairman at Shri Cement. Hi, Mr. Bangur. Good morning. Always a pleasure, sir, to have you on the show. Thanks a lot for joining in. Well, let's focus first on incentives. For the past year, what were the total incentives, pan-India, that Shri Cement realized in its books?
Shri Cement realized roughly 80 to 100 crore rupees, something like this, as incentive in the books.
All right. For the past year, right?
Right.
Anything came in from West Bengal?
No, in West Bengal we don't have any unit, and West Bengal government at present was very clear that we will not be giving any incentive. The incentive scheme, which was announced earlier, that has been revoked. But for the last 5 years or so, there was no scheme.
Okay, all right. So no exposure out there, got that. And I think the industry itself was not expecting these incentives to come about. That's why we haven't seen the stocks getting hit. Just a quick question. Do you think that other states as well could start looking at this? That 80 to 100 crores from which government do you get?
Mostly from Rajasthan, little bit from UP and various other places. And I don't think that any government will ever revoke it. West Bengal was not giving it. The scheme was not in force for last 5 years or maybe little more. So it was that they regularized it, I would say.
Okay, all right. And I think if I'm not mistaken, Mr. Bangur, your cement dream itself started in Rajasthan itself. Your first plant was in Rajasthan, right?
Right.
All right. I recall visiting it, a few years ago.
Right.
Well, Mr. Bangur, then let's get straight to business. How are demand trends, in your core markets, which include North as well as Eastern parts of South? What are the demand trends you have observed? I ask you this because pricing has improved. However, a couple of brokerage notes, like one that came in from Nuvama, they indicate that, in fact, demand was a little bit subdued in May. What are your thoughts? And this onset of early monsoon, has it spoiled your projections a little bit?
Monsoon comes every year. In fact, the good monsoon and early monsoon may disturb for about 10 days, 15 days when the monsoon is there or when the rains are there. But overall, good monsoons means good rural demand, good urban demand, everybody else money, the demand will be better. So early monsoon is a good sign. As far as the demand is there, demand is little subdued in May because of the heat wave. And in the first 5 days, because of the uncertainty about war in North India, we knew it little later, but the government had stopped many works and put many embargoes to work in extreme part of Rajasthan like Jaisalmer, some part of Punjab, Himachal. So something was going on, we could understand. But what was it? We were not knowing.
Okay.
Operation Sindoor, the effect has started earlier. The government has done the blackout exercise. All those were part of the things which affected demand.
Right. So in light of all of that, Mr. Bangur, what kind of volume growth are you anticipating? I remember last time you said that 8% is likely for FY26. All things considered, do you think you'll manage that? And at what prices?
Volumes of the industry will rise by 7 to 8%. I still maintain it. We will be having lesser volume growth this year. We have increased our prices very much. So our profitability will be better with lesser volume. Our volume growth will be about 2 to 3%, or maybe if the things goes well, 3 to 4%. But our price increase will be maximum in the industry. Now, whatever discounts we are given has been at par with the industry. No extra discount, no lower amount of sales.
So overall revenue growth would be how much? 2 to 3% volume growth realistically. Price growth would be how much?
Price growth will be 6%, 5 to 6%. The revenue growth will be 9% or so.
Okay, all right. So you're going with profitability over pricing, over volumes. Is that correct?
Right. The volumes will come later once the prices are corrected.
Okay, and that would mean your targeted EBITDA per ton on an average for the year will be how much? Since you'll get the benefit of pricing, you've also focused on the cost side. So that should be a firmer EBITDA per ton. Give us a range, sir.
Range, whatever was in the first quarter, I think that should be maintained. But then it is a commodity, we cannot say. But compared to the industry, whatever there was in the first quarter, that will be coming to us.
Okay, but
it is about 1,400 rupees.
1,400 rupees for the year is something we could work with, right?
Right.
All right, Mr. Bangur, there's another asset that's on the block, and there's been bidding that's been postponed actually by a couple of weeks for the JP Cement's asset. I think it's around a 9 million ton unit. Would you be interested?
No, we will be quoting at our price, but as the industry is aggressive, we may not be getting it. We will be quoting what we think will be a fair price. And I am always a conservative, conservative.
And so for a million ton, what do you think it's worth?
Now, it is not like that. You have to see how much limestone is there, in which market they are. Secondly, the maximum amount comes not because of the machine capacity, but because they have the market. Here, they don't have the market as they are absent in the market for so long. So their actual sale is little. So I don't think very fancy price should be given.
Okay, sir, but so according to you, what is fancy? Because in the last many years, you have been part of various, you put in a bid, but your bid actually is quite low, sir. That's why inorganic growth is something that you have not pursued. So according to you, if you're doing inorganic growth, what is the EV per ton that it's worth?
No, that I will not say. That more details have to be there. But we are not depending on the inorganic growth. Our organic growth will put us at what I have said is that by 2030, it should be 80 million ton. It will be 80 million ton, maybe a year earlier. Because we have our plans already very much established. Now, within the next 6 months, one unit should be coming in Karnataka, 3 million ton clinkerization unit. One should be in Rajasthan, again another 3 million ton. So 3 to 4. So, only about few days back, few months back, our Chhattisgarh unit of grinding unit has started. So they are very much on the line.
Okay. Okay, I've got that, sir. But, I'll tell you what the problem is. You run the business well. You threw up a lot of cash. The problem is the stock has been underperforming because the street wants to see a little bit more aggression. So, fair point. You're saying that organically you want to grow your capacity. Got that. But what about the cash in your books? Do you think that you can reward your shareholders? I think you're sitting, if you could help me out with that number, I think it's around 5,500 crores of net cash in the books. Yeah, maybe a one-time big dividend or buyback. Is that something on your radar? That's something you're discussing with your team?
We are discussing many ways to reward the shareholders, but it will not be fair to reveal it before the board meeting and before the other formalities are there.
Would you, look at deploying this cash, because you're saying that your 80 million tons target comes 1 year in advance? Is there a way you will announce further organic capex as well?
Yes, further organic capex will be continuous, and our policy is to announce it not on the way we think, but when everything is on ground, when the permissions are there, when land is there, when all EC is clear, then only we announce. Because we don't want to announce, front running we will not do.
Ambition-wise speaking, 100 million tons by when, sir?
80 million tons, another 3 years.
80 million tons.
And 100 by when? The century?
Century, maybe 3 to 4 years more. Because after 80 million tons, 20 million tons is only 5 million tons each year. So it will be 3 years or 4 years maximum.
Okay, and this reward to shareholders, could you give us a time frame? In this year only we'll hear about it?
Yes, only this year, not date.
Okay.
So it will be what, buyback or dividend?
That's what I said. I will not be able to say right now. Because first it has to be clear by board, it has to be clear by so many people.
Okay, let's ask another way. How much cash are you comfortable with on your books? How much do you think is excess right now over and above what you really need?
What we need is, in a profit-making company, the need is not really that much. Only need is that if ever anything comes cheap or if any opportunity is there, we will not like to miss it. And the point is the company is not having any debt. So without debt, we are adding our breakup value of shares will be roughly 28,000 tons, 27,000 tons of assets we have added.
Sure.
So when you say our prices, the prices are basically replacement value prices.
Oh, yeah, sir, the thing is, I think I've been hearing very carefully, the boys are trying to push you very hard to get some sense of the shareholder reward. What is going to be the quantum? When will you come out with it? But I think Mr. Bangur is also keeping his cards close to his chest, at least for now.
Because we are duty bound not to disclose it
Yes.
in this forum.
Yes,
Got it.
absolutely.
Got it,
He's a
Mr.
bridge
Pap-
player, so obviously he keeps his cards very, very close to his chest, always.
All right,
Okay.
Mr. Bangur, we appreciate you joining in. We're going to be holding you to some of these numbers. Profitable growth is what you're looking at. EBITDA per ton of close to around 1,400 rupees. Maybe volumes will not be as much, but pricing is something that you're focused on. And we look forward to that reward as well. The street will be waiting by for that. Thanks a lot for joining in and speaking to us here on CNBC TV.
Thank you.
Okay, all right. With that, it's time to move on to the spotlight on the auto sector. By the way, the market's very quiet. I mean, just in case you're wondering, still about 16, 17 points up. That's all we have. It's another extremely quiet morning of trade. But now, as promised, let's get to the auto sector. A story that came in yesterday revealed that Maruti Suzuki's big launch for the year, which is the e-Vitara, Grand Vitara's EV version, that production could be delayed on the back of the rare earth magnets crisis. Parikshit is here with some perspective on this. Parikshit?
Yes, Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnets. The big launch for them this year was the electric Vitara. They had showcased the e-Vitara with great fanfare at the Auto Expo. The plan was to start exports and have a commercial launch in India probably between July and August. All of that could be delayed right now because of the export curbs. And there is not enough stock of rare earth magnets to make the e-Vitaras, as many e-Vitaras as was planned earlier. We hear from sources that the company had an initial plan in April to make 88,000 electric Vitaras. That outlook was earlier slashed to 67,000. For the period between April and September, the company had a plan to make 26,500 electric Vitaras. Because of the current magnet crisis, that outlook has been slashed to 8,200 electric cars only. What Maruti hopes is to make up for the loss of production from October onwards. So they feel that the production can be adjusted and somehow the company will still manage to meet its revised production outlook for the e-Vitara at 67,000 units in the full fiscal year FY26. But for the moment, clearly there is a problem. We've been told by sources that the start of production has not been deferred. Production is taking place of the e-Vitara, but in small quantities, and perhaps this will be only for addressing the export market initially.
Okay, all right, Parikshit, thank you very much for that. So this is beginning to bite. It's getting real, no longer just within the realm of discussion. Let's take it forward with Herman Suraji, editor at Autocar India, and Vinkesh Gulati, director at United Automobile, and of course the former president of FADA, the Federation of Automotive Dealer Association. Gentlemen, thanks so much for joining in. Hormaz, let me open up with you. I mean, if you go by the reports last 5-10 days, the Chinese have started giving these magnets to the Europeans. They're giving it as part of the trade talk to Stellantis, to GM, to Ford. But there's still no breakthrough for us. They're still not giving these magnets to us. What do you think the fallout could start, could be July onwards if this is still not resolved?
No, I think it is. It's really a major issue. It's like someone said, the microchip semiconductor shortage or crisis on steroids. It's even worse because really production lines can completely stop, and we have no alternative but to source from China. And as we know, because of the geopolitical issue, there are going to be difficulties. And let's not forget, even India is not such a critical market for China yet. Obviously, they would kind of prioritize the Europeans. Don't forget, a lot of European brands have investments and they're huge in China, whether it's Volkswagen. So I think clearly you will see that the countries like Germany and all, they will be prioritized first. And I think India, from what I understand, there's no headway yet. And it's a very long and laborious process to get the approval. So I think that also is a challenge. So I think this is really could, precipitate into a major issue if it's not solved quickly.
So, Hormaz, just in terms of understanding potential impact, what happens? I mean, I'm not sure what inventory levels would manufacturers be holding right now, but players like Tata Motors, or everybody for that matter, EVs are everywhere, including the major EV players here in India right now, which could be unlisted entities like BYD as well. What should we be prepared for
Yeah, absolutely. I think the EV players definitely they will be impacted the most clearly because the electric motors need these rare earth magnets, and without that you can't build a car. But it's not just the EVs; it's even the standard ICE vehicles, which take about half the quantity of rare earth magnets an EV would. But even then, even in an ICE car, you've got components like the EPS, the power steering motors, the electric window motors. So all these components need rare earth magnets. So really, I think as motors have been miniaturized, that's where rare earth magnets have their advantage, and that's what has been in use in the industry, and everyone's using them. It's actually just a commodity, but I think when one country controls 90% of the supply chain, that's when it becomes a problem.
So what other countries do you think can be drummed up? Because for production, etc., there is always that China plus one sort of strategy. But for natural resources, what other countries do you believe have the potential for supply? Or are there any alternatives here? Because this can't be, so lopsided.
Well, I think the thing about rare earths is actually it's in abundance. It's everywhere. Even we have them. Why it's rare is very, very difficult to extract. And that kind of, let's say the extraction process requires huge investments and billions of dollars. It's literally like taking a needle out of a haystack, because they're in such minute quantities to mine them, then to process them, and then to convert them into a finished product is hugely capital intensive. So I think that's where really the challenge is, and I think that's where China has taken a lead over everyone, the rest of the world, and to set up that sort of capability of extraction, production, and then finally producing a finished product. That I think is the issue, and that can't be done overnight.
Absolutely. I mean, as some estimates suggest that I think over 90% of the world's refining capacity for these rare earths, that is in China, and therefore they hold the key. And I think there's some talks already about India looking to get self-reliant, like we did in semiconductors when we started now putting up those fab units and plants. But then again, these are multi-year stories. You don't produce those magnets overnight. So your concern is well taken, Herman. If I could come to you, Vinkesh. Now, the issue is that let's understand what are current inventory levels like. I mean, what's your assessment, both on EV and ICE passenger vehicles? Till inventory is still okay, maybe we tide over it and hopefully there's a resolution. So it's important to understand that. Give us your perspective.
So good morning. Thanks for having me. We have just released the data, the FAD, if you have seen. It's 52 days to 53 days. We have inventory at the dealership level, which normally we don't say, but I feel it's lucky to have when this rare earth material magnet problems have cropped up. And additional to this, what the messages we are getting from our OEMs is they are also sitting at 4 weeks to 6 weeks inventory at their plants or in the process of manufacturing, which clearly shows that as of now, we are sorted at least till August mid or end. But if this continues, the problem will crop up from September, which is the festive this time because Navratri is coming in September. There are some good dates in August also, but I feel the inventory at the dealership and at the OEMs will sort out till that time. And I hope till that time some problems will be resolved, maybe diplomatically or whatever things be.
That's really important, and I appreciate you, being candid on this with us, Vinkesh. I mean, typically the industry doesn't give out the real picture for obvious reasons, pricing concerns, etc. But what you're saying is that between dealerships and back at OEM plants, we're covered for a good 3 months, in terms of inventory till end of August. June, July, August will be fine, right?
Yeah, I hope so.
Yeah.
So mid-August or end August, it will continue because, see, this is the time of a low season when the rains are there and so overall scenario, so there are no auspicious occasions and all that. So from August, things will start coming back. And till that time, we are covered. So,
but that kind of brings me back to the other related issue as well, which we've been all discussing. I mean, the market's been watching these numbers carefully. And PVs, barring Mahindra and Mahindra, especially from a listed universe, I mean, it's been a non-starter, right? Low single digit, flat. Those are the kind of sales numbers that we've been getting at the wholesale level. Herman, maybe, you take this up. I don't know if this this crisis will prove to be a turning point. But otherwise, PV sales have failed to enthuse or surprise. I remember when Hyundai was listing, I remember categorically, an answer that the management gave us. And I had asked this, that what's a steady state growth expectation? So he said, look at historical data. 4% to 5% passenger vehicle growth for a company should be okay in India. Your thoughts on the big picture?
Well, I think, to be honest, we've had many years of stellar growth. We're around, 4.3 million. And, to expect consistent and the same rate of growth off that very high base, I think is quite unrealistic. I think, we have to also accept that, the demand situation, it definitely is tapering off. I think multiple reasons also. I think cars are also just getting more and more expensive. And I think, I think even the replacement cycle, we've kind of absorbed that one huge replacement cycle. And, I think right now it is cyclical in that sense. And Vinkesh will also bear me out. I think we are going through a phase of, let's say, flattish growth or no growth. And then I think, again, we'll get into the cycle where we will see growth again. So I think this is actually quite normal. And I don't think it's anything that I would see as unexpected, because I think to expect, let's say, double-digit growth was unrealistic. I think even high single-digit growth is unrealistic off this very high base right now.
Right. Let's give the last word to Vinkesh. Vinkesh, what about EV penetration? It's been a lot slower than what the street was anticipating this time around. So for non-EV makers, it is positive, but for EV, the entire, ecosystem that everyone was betting on, it's not growing as fast. Where are your expectations on EV penetration, specifically in four-wheelers and also two-wheelers? It's been slightly slower than expected.
And if I could just supplement Mangalam's question, Vinkesh, also tell us about any upcoming launches that could kind of fire up. Now, the e-Vitara seems to be a casualty of this rare earth crisis. So would you expect any other companies to encounter the same? Go on, tell us more about your outlook on EV.
See, very frankly, 2025 was the EV launch of the year. So we have a lot of EV launches, which we have seen in the Auto Expo Bharat Mobility Show this year. From Hyundai, Creta, e-Creta, and then e-Vitara, Mahindra launching in, Tata planning of one or two more products in coming months. So we have always expected that 2025 will be a year where most of the OEMs will have an EV in their bandwidth, which means most of the dealers will be selling an electric vehicle from their showroom, which wasn't there till 2024. And now, because of all the delayed launches, like Creta is still delayed. Now, e-Vitara, we heard because of rare earth material being delayed. This all is clearly showing that EV adoption of the year would not be 2025. I feel 2026 will be when we start seeing bigger numbers or bigger ratios. We are currently at 4 to 5%. I feel it will start growing by 2026, when at least all Maruti dealers, Hyundai dealers, Kia already has, but a high price product. Mahindra is already there. Tata is already there. When 4 of the top 6 OEMs dealers will have a good EV, which is around 20-25 lakhs to sell, then we'll start seeing the numbers going up. No doubt the EV adoption as of now has a lot of challenges, but still the way things are going in passenger vehicle was expected. It's a good percentage as compared. And on the other hand, two-wheeler also, if you see the percentage is increasing month by month. We are now averaging more than 1 lakh vehicle per month. And I'm hoping with the kind of even HMSI has now finally announced those 2 products they are coming in. As we get those 2 products, the same thing, we'll get 80% of the two-wheeler dealers now getting an electric vehicle. So I feel the most important thing for EV adoption is actually jo dikhta hai, wo bikhta hai. Every dealer should have a product in the dealership, or else they'll actually work against it. So
absolutely. Take your point, and this already sets us up for our next discussion. I'm looking forward to that one. that will 2026 year be the year of EV adoption, as Vinkesh is saying, and then what will it be? Would it continue to be those EV SUVs, or would it be something else? Which segment will lead? I think that's a good one for the next time. But for today, thank you very much, gentlemen, for joining in on what continues to be a big challenge, the rare earth magnet crisis, as it is rightfully being called around the world as well. Okay. Well, with that, that's the auto space. We're moving on to another interesting discussion and now putting the spotlight on the insurance sector. There's been a lot of news flow when it comes to insurance in the last couple of days. And, of course, a lot of those news breaks have come in by our colleague Yash himself. So let's talk about this. I mean, in terms of news flow, there's the rise in the motor third-party premium. That's what, Yash put out, that perhaps we'll finally get an increase in motor third-party after 4 years. Also, there seems to be a bit of a go-slow approach in terms of cracking down on the bancassurance channel, something that became a big story a couple of months back. But now I think the government could be having a new, refreshed view on that. This is all, of course, news breaks that Yash has done in the last couple of days. So let's discuss this going forward with Mr. Raghuvesh, who's the Insurance and Capital Markets Analyst at JM Financial Institutional Securities, as well as Nilesh Sathe, former IRDAI member. Gentlemen, thank you so much for joining in. Mr. Sathe, let me come to you. I want to take up the contentious issue first of breaking up the agent network. Again, our colleague Yash's latest source-based inputs indicate that abhi thoda pause hai us pe. Earlier, it started becoming it would have been a massive change if insurance agents could be selling policies across multiple insurers. But I think there was some pushback from LIC for obvious reasons. So that's, I think, on hold for now. But your thoughts on whether this is a big reform that we're pushing back?
In my view, this is not the time to have open architecture for insurance agents. I will tell you the reasons for that. One is the number of agents that we have even today is only 25 lakhs. Considering the insurable population, we know that the penetration of insurance is pretty low. Considering the insurable population, if we consider it 75 crore, 25 lakhs is too small a number to cater to these 300 per agent number which comes to. This number has to go up. One, it gives self-employment. And second is the mis-selling which is happening because there is a lack of understanding of the products by the customers, that may go down. So the question is, should open architecture, as is allowed in case of mutual fund, be allowed in case of insurance? In my view, no. I'll give you the reasons for that. There is a risk of mis-selling going to increase because any company which is giving higher rate of commission, there will be a tendency of agents to sell those products. There will be a loss of accountability as well because one agent may be doing good business for one company, but if he is found doing wrong things in other company, he will have to be terminated by both. So this is going to be a complex issue. Training challenges are also there. See, today there are almost 70 insurance companies, life, general and health together. If I am allowed to sell products of any insurance company, is it not necessary that I should be adequately trained for all the products of all the 70 insurance companies? That's going to be a big challenge again. So without training, if I'm selling a product just because I am likely to get higher commission, that is also not good. So this is a product
But sir, the counter argument could be that at some point in time the industry has to mature, and insurance has been, even the mutual fund journey. And then the regulator is going out there trying to segregate distributors from independent financial advisors, the IFA community or the RIA community. So reform is a process. You have to start at some point, right?
Yes. So what has been started? An insurance agent is allowed to sell products of one life, one general, and one health insurance companies. This has already happened. Corporate agents are allowed to sell products of 9 life, 9 general, and 9 health insurance companies. There is one intermediary called IMF. He is allowed to sell products of 3 life, 3 non-life, and 3 general insurance companies. So it's not that changes are not happening. Right? If at all a person is so ambitious that he can sell products of all the 70 insurance companies, he should take brokership. That option is also available.
Okay.
The question is,
Okay.
And this is transition which is going on. I'm not saying it is bad. It is good in some of the countries like Singapore, Australia, it is allowed.
Sure.
But the question is the market matured enough to have open architecture in insurance?
Okay.
Insurance and investment. See, mutual fund products are investment products, but these are quite complex products. So insurance products need a lot of training on every product because every product has got a different complex.
Yes. So that point is well taken. Absolutely well taken. I just want to put up a data point for reference. This year, calendar year 25, has been the year of actually more life insurance stocks than general insurance stocks. Let's look at what the stats say. Most of the general insurers or the standalone health insurers, Niva Bupa -1%, Star Health -3%, Lombard has fallen about 10%, Go Digit has done relatively better, 8.5% up. Now contrast this, so those are either your general insurers or standalone health insurers. Contrast this with life insurance, and that's where it's been a good run. I mean, the gains are ranging between HDFC Life 25%, SBI Life 28%, and Max, look at Max, 38% over there. Relatively, ICICI Pru has been an underperformer this year. Stock's up, it's not up actually, it's down about 2% odd. So let me bring in Raghavesh here on this front. Raghavesh, so let's talk about life insurance. Would you say that the reason behind this rally also is that after a very onerous series of regulatory changes in 23-24, whether it's tax or other regulation, now there seems to be a bit of a cooling off. In fact, our latest story that Yash did was actually saying that the government is now telling banks that you should help with insurance penetration. A couple of months back, there was a fear of a crackdown on the banca channel, on bank assurance. What's your view on life insurers? Which ones do you like? And what's your overall thesis?
Yeah, thanks for having me on the show. So regarding the bank assurance channel, while there have been news breaks, the companies have maintained that they have not received anything from the regulator. That being said, they are focusing on mis-selling. The growth expectations from the banca channel, especially the parent banca channel, has come off for the top listed players. If we see ICICI Prudential, SBI Life, HDFC Life are all bank-led insurers. Now, from here, the base expectation is 10 to 12% growth from the banca channel for these players. These guys over time have also invested in their agency. We are looking at a good 15% kind of growth for, say, an HDFC Life, somewhere around a 12 to 13% for SBI Life, and an 11% growth for IPRU going as they finish FY26. This is on the top line front. On the margins, last year we saw very strong sale of ULIPs, which is the lowest margin product. The natural demand came in with markets being strong. The expectation is FY26, we see the demand for more of return guarantees, which is margin accretive for the insurers. So when we are looking at teens VNB growth, I think the life insurers are well placed to move further on that rally.
All right. Hi, Raghavesh. Good morning. Good to see you, Ben. I wanted to focus on, the motor third-party insurance hike. That's something that my colleague Yash was working on as well. So in your estimates, what are you factoring in terms of the potential hike that will finally be approved by the Ministry of Roadways, point number one? And what's the sensitivity analysis you have with regard to its impact on the combined ratio?
So in terms of the growth impact, so taking ICICI Lombard, for example, around 40% of the business comes from motor, almost evenly spread between third party and own damage. Now, if we assume, say, an 18 to 25% hike in premiums, which is what was in the news, I mean, that translates to something like a 4% hike on growth. Now, the industry growth itself has been pretty weak. That being said, there is an impact of the regulation change. Like last year, the reported growth for the industry was somewhere around 6%. Actual growth, if we remove the impact of the regulation change, was around 8.5%, 8.6 to be exact. Now, what kind of TP price hike I am baking in? My base case assumption was no TP price hike. Expectation was if it was to be announced, it would have come in April and May. Now, if I were to take a 4% higher growth for Lombard, what we have generally seen is a hike in motor TP would result in some cooling off in the pricing for, say, a motor OD product, with insurers broadly maintaining their combined ratio. For a company like ICICI Lombard, I think they are comfortable on their combined ratio at 102%. They would like to bring it lower. I think the combined ratio does not materially improve. Even if there is a price hike, they'll invest it for growth. My base case assumption is somewhere around a 13% growth for ICICI Lombard for FY26, increasing to, say, a 15% growth in FY27. My base cases, the growth numbers increase as they spend on acquiring new business.
Okay. All right. Got that point. Thanks very much, gentlemen. Slightly shorter discussion, but important developments, all of this, whether it's, the relevance of the banca channel, whether it's open architecture, or, of course, those long-awaited increase in premiums on motor third party. Thanks very much for joining in. We do have to take a quick break on that note, come back on the other side, and we'll have some, updates coming in on the commodities side. Welcome back. 50 points higher on the Nifty, and it's all thanks to Reliance. It's Reliance to the rescue today with a gain of about 1.5%. Otherwise, the mid-cap index is flat. The bank Nifty is also not doing too much at this point in time. So that's equities. But let's find out what's the big news in the world of commodities. We have Manisha with the latest. Manisha, tell us what's on your radar.
It is crude oil prices because it's been very, very volatile. Having said that, it has been trading within a range, but we are trading at a 7-week highs at this point in time. All focus, and I'm assuming all asset classes as well, are looking at the US and China trade talks, where we do know that there has been a lot of progress, but the final notification or the word on the paper is yet to be seen there. The markets also are looking at Canada entering into direct talks on tariff with US as well. So some positivity coming in on the tariff side, and these are the major consumers and producers as far as crude oil is concerned. So the markets are looking at some ease in sense of prices there. Apart from that, we also have seen Saudi Aramco cut China shipments by 1 million barrels for the month of July. So even as OPEC and allies have increased production for the month of May, June, July, and perhaps going forward as well, the expectation that the OPEC plus production may not result in significant supply boost has also been supportive for the prices there. And then there are geopolitical tensions too, which are adding premium to prices. Iran, for one, is expected to submit a counter proposal for its nuclear deal. And then European Union also is coming out with an 18th package of sanctions targeting Russian energy sector this time around. The markets are looking at potential increased US sanctions on Venezuela as well. So all of those geopolitical tensions and developments and statements every day is what is impacting prices. It also is about Saudi trimming July prices for its Asian consumers, ensuring and expecting that the Asian consumers will be looking at a higher demand going forward. The peak summer travel demand season for the Western world, which remember the vacations for that and them start mid-June, is also expected to be positive. But the most supportive of factors clearly comes in from US. The very interesting IEA report came in last evening, which tells you that the US oil and rig count has continued to decline, even as we've been talking about drill, baby, drill and higher production from US markets. But that is very clear on your screens right now. For the last 3 years, and this is the third year, by the way, when we have seen the number of rigs in the US continue to decline. 20% down in 23, 5% down in 24. And this year, until now, we've already seen a 6% decline. Now, the result of this doesn't come immediately. When a rig is shut or a planning for a rig is being made to be for it to be shut, the final number changes only after 12 to 18 months. And that's exactly what the IEA also says. They say that by 2026, you could be looking at a lower production coming in from US. So while we've seen 13.5 million barrels per day of a record production in this quarter, next year could be much lower at 13.3. And this could be the lowest perhaps in last 4 years in sense of production, clearly supporting prices going forward.
Okay, all right. So that's all about crude. But Manisha, tell us about the Big C. The Big C for viewers is a brand new show that Manisha is going to be launching on CNBC-TV18 Prime. Tell us more, Manisha.
Oh yes, Big C actually will give you everything about commodities, currencies and crypto as well, with a big global flavor. Well, there's just so much happening in the international markets, and this is another asset class that you have to keep an eye on. We've been watching equities for a very long time now, but a lot of money seems to be flowing into these asset classes, which also are getting impacted from tariffs, from the kind of investments. And these are the metals and currencies that also have seen a lot of investment, financial instruments being launched into in global markets and in India as well. So how is it that you can make use of these asset classes, include it in your portfolios, the price impact, and of course, the policies impact is all that we will discuss today at 1 p.m. at our brand new show on CNBC TV18 Prime, The Big C.
Currencies, commodities and cryptos, all the big C's are there. So make sure you catch it. Thanks for that, Manisha. And looking forward to the debut show. Right now, a quick break. We have to move on. And when we come back, Lata will be in on the other side. And she'll be in conversation with Subramanian Sharma of L&T to discuss the company's energy business.
Welcome to Corporate Radar. Larsen & Toubro reported better than expected results for its fourth quarter, with revenues growing at 18% versus a guidance of 15%. Order inflow growing by 18% again versus guidance of only 10%. For FY26, the company has guided a further 15% growth in revenues and an improvement in margins as well. It's guided for a 10% growth in order flows. However, with crude prices staying below $70 this quarter, will the Middle Eastern orders slow? For these and other issues, I'm joined by Mr. Subramaniam Sharma, Deputy Managing Director and Head of the Energy Vertical at Larsen & Toubro. Mr. Sharma, good morning, and thank you very much indeed for your time. Let me start with this energy orders. Your revenues and your order book inflow was extraordinary in the quarter gone by, in the year gone by. Will it be tough to repeat? 36% growth in revenues, and I think something similar even in terms of order inflow. Will it be tough in the current year because Middle East doesn't have a very high crude price?
Yeah, Lata, thank you for having me here. Good morning to all of you. I think the budget planning and capital expenditure planning in most of the Middle Eastern countries is done based on taking a long-term view and medium-term view, and the short-term fluctuation in the oil prices do not impact the capital outlay directly. And they also have some kind of categorization. There are projects which are allocated for what I would say is essential, and there are also projects which are of high priority, and there are, of course, nice-to-have projects. So when the oil prices are in the particular range, a desirable range based on which they are budgeted, I think then all of them will go ahead. If there is some softening, which we have seen now recently, so some of the non-priority projects or nice-to-have projects will drop off. Fortunately for us, L&T is involved in projects which are like high priority, mostly oil and gas in particular, and also in renewable power, so which are all essential building blocks, economic growth and diversification of the economy from I do not expect any major
reduction in orders.
Possible shifting to the right.
Okay.
Which we are still looking good.
Okay. Well, actually, last year, the energy order inflow itself was plus 19%. And we have reports from many analysts expecting that it could be even better. You want to give us a number in terms of energy inflow orders? Your overall order book, you all say, is 10% in terms of guidance. Yeah. Yeah. Mr. Sharma, you can hear me?
Lata, sorry, I lost your connection.
Okay. I'll repeat my question. Last year you did 20% in terms of energy order inflow, actually 19%. Will it be better this year?
Yeah, now I can.
Yeah. Can you just tell us what will your energy order inflow book be in FY26? Last year you did 19%.
More or less, we are in the...
Okay. I think we probably have to connect him on phone. This is creating a problem. There has been a lot of enthusiasm. I just have an Investec report from me which expects very attractive growth opportunities for L&T and for Afcons from the Middle Eastern region because of Indian companies like Larsen & Toubro, now not subcontractors but primary contractors, what they call LTA contractors in the Middle East, and plus lesser competition from Korean companies. So the expectation is that the Middle Eastern book should do very well. The other challenge for L&T, of course, will be whether the domestic power sector will give the same amount of orders. We saw a cooling off of power prices and, of course, state governments being a little out of pocket. So whether the domestic power energy sector also will be able to give orders is something that we have to watch out for. Do we have Mr. Subramaniam with us? I mean, I guess we have to put him on the phone line. Okay, we'll just get to you in a minute. Not our best day when we thought we have one of the best of companies joining us. But we should get Mr. Subramaniam shortly, at least on phone. for us. There are a lot of questions. I'm brimming with at least the companies investing in green energies. It's also likely to get nuclear orders. We have to check out if the government of India has even begun those orders. Energy itself is an important vertical for L&T. As you can see, the revenue growth from that particular vertical has been higher than even the energy, growth from the other two important verticals, high-tech manufacturing and infra. Margins are, as per the normal margins of L&T, around 8 to 8.5%. But revenue, the quantum of orders from energy has always been very high for L&T, and therefore it's important to know what Mr. Sharma thinks in terms of orders from the Middle East. Okay, Mr. Sharma, I'm sorry, we just have you on phone. Unlucky. I was wanting to know, will you be able to repeat this 19% order inflow in the energy vertical that you got in FY25?
Yeah, I think we have discussed here reasonably good pipeline of projects.
Okay.
I think we have a very diversified presence within the Middle East. It's not just Saudi. We are seeing a lot of projects coming up in Kuwait, also in Qatar and UAE. We are quite actively participating in those. And also some of the CIS countries are opening up. So I think all in all, I remain kind of optimistic that we will be able to sort of deliver a robust growth.
Okay. What about Indian energy sector? What kind of visibility do you have from the power sector? Because power prices cooled a bit on the IEX. Transmission orders have also come your way from Andhra. You just announced some transmission lines. How is the energy sector in India looking?
I think energy sector in India is also looking good. I mean, we are a growing economy, so the energy demand in India is continue to grow. We are seeing uptake in the thermal power plants. We are also seeing increase. I mean, a lot of interest coming from the nuclear energy production, and all of that will require further enhancement of the grid, because the entire transportation of the power from various sources, including the solar plants which have been built, has to be nicely connected. The grid stability is important. So I think we'll continue to see a lot of prospects in the transmission and distribution as well, and grid stability projects.
Okay. Can you tell us something about nuclear? The expectation is that the Indian government is going to give it a push.
Yeah, I mean, I think, like I said, Lata, I mean, as the country's economic growth, we'll have a massive growth in the energy demand. And not just that, but we also want to transition towards cleaner sources of energy. Government of India has already made a commitment to have carbon neutrality by 2070. So we'll have to sort of not only build additional capacity, but it has to be cleaner sources. And more importantly, I think from a country's perspective, we also need to have energy security. So I think all of those factors fit quite well with the nuclear. So nuclear will have a bigger role to play. I mean, we only about 10 gigawatt of production we have, generation we have. As we have seen from the draft documents, this is likely to go up to 100 gigawatt by 2045 or 2047 for the Viksit Bharat, and which is like 4 or 5 gigawatts of nuclear capacity getting added every year. So it's very exciting. There are a few things to be sorted out with the government, and L&T has the whole range of offering from manufacturing to EPC projects, and we have participated in many of the nuclear.
Yeah, Mr. Sharma, if you can name anything that is on the anvil now in terms of big projects in your vertical.
Currently, I think there are no specific projects yet, because we have a civil liability issue to be resolved. I think that the discussion is ongoing with the government. Once that amendment happens in the bill, I think then a lot of projects will come in pipeline. But it's not hard.
No, I get your point. In nuclear, we have to legally sort out the civil liability issue. But non-nuclear, is there any big order or tenders on the anvil that y'all are excited about, for which you will bid?
I think not specific tender, but generally the prospect is very promising. I mean, it's a matter of time. Just few months, I think we will see a lot of opportunities coming up.
Okay. And any further exciting orders in green hydrogen, both in the Middle East, in Qatar, and those countries, as well as in India?
On green hydrogen, as you would know, I mean, we have participated in the first green hydrogen project for the Indian refinery sector, IOCL Panipat. It was a reverse auction, and we are declared as the lowest bidder. So we are anytime waiting for that award, and we are very excited about it because that's the first green hydrogen project using renewable energy and our own electrolyzers. And we also participated in similar such tenders for other refineries. We are also having discussion with some of the steel producers in the domestic market. And when it comes to international, we are seeing a lot of traction now in the Far East, more so in Korea and Japan. And what we are expecting is that the marine industry, that's where the carbon tax is quite high. The arbitrage is good, and then the green ammonia application is quite promising. And there are bunkering facilities in Singapore and Far East and also in Dubai. So India could become a good hub for supplying green ammonia using green hydrogen. So I think the export market also will develop in next 2 to 3 years.
So shipping is the big sector that you are expecting will give you orders.
Correct.
Okay. Well, let me come to an issue which is beyond energy, but then you are the DMD, so I'm sure you're in the know of these things. This controversy that the court pointed out with respect to the MMRDA order. Has there been a rebid? Have they contacted you? What's the next step?
No, not yet. I mean, I think the court verdict came in only just a few days back. So as far as we know that the original tender has been annulled and that the whole process has been now terminated. And then now it's a wait and watch. I mean, I think it's an important project. So we are hopeful that it will come back in some form or the other. We'll have to wait and see.
Okay. What is your total exposure to state governments? Would you expect a backlash because of the court order? What's the exposure at all to state governments?
No, not really. I mean, I think, we had a principal issue, so we took it up and sometimes we have to, I mean, it's very quite nicely accepted in India to sometimes go through a legal route. So, but otherwise our relationship is good. We value our customers and they have been, MMRD has been very an important customer. We have delivered a lot of projects. Otherwise, our relationship is great and we want to continue to build that relationship. I think every customer is important, including state government, and that has been our approach. And that's the reason why we have been existing for almost 8 decades, right? So
Point taken.
That holds
Point
good
taken,
still.
sir. Point taken, sir. Just if I can squeeze in one more, what is the status of the Hyderabad metro monetization? That's the only part in your investor presentation where the arrow was red. Is there any progress in terms of monetization coming to cash break even?
Yeah, I mean, I think one good news is that the footfalls have increased. I mean, I think it has been going up quite gradually. And more IT companies now asking for work from office. We expect that to grow. So that should help us in reaching closer to our break-even point. We also have monetized many of the real estates within the Hyderabad Metro framework. I mean, many of those properties. And we are in continuous dialogue with potential investors, parties who are interested, some of the pension funds investors and some other private equities. Well, I think we'll have to wait for some more time. We will see how we can reduce the debt using the funds coming from our ongoing business. And I think it's a matter of time. It should get sorted out maybe in a year or two.
Just give me a one-line answer for margins. Will you do better than last year in your own vertical?
So I don't have a crystal ball, Lata. I think we are all trying to deliver better results. And year after year, I mean, that's all we do. And we are all working very hard to continue to provide the growth, and we'll have to wait and see.
Okay. So I'll have to call it a day. We are over time on our show, but I'll take a rain check from you for another show or another day. Thank you very much, Mr. Sharma, for joining us. So that's the word from L&T, not impacted because of the crude oil prices falling, because they're fairly diversified and they expect good orders to continue from the Middle East. Wrap up on Bazaar. Chart Buzz is coming.